Welcome to The Explainer. Today, we are diving deep into what's being called the Greater Toronto Area's biggest housing correction since the 1990s. We're going to look at the numbers, comb through the history, and figure out what it all means for you. All right, let's just jump right in with the number that has everyone talking, a massive 24.4% drop in Greater Toronto home prices from their absolute peak. That's a huge figure. So to put that in perspective, we're talking about a slide that started way back in February 2022 and is projected to last 4 years. But, what does a number like that actually feel like for people on the ground? And maybe more importantly, where are we headed from here? Here's how we're going to break it all down for you. First, we'll look at the sheer scale of what's happening now. Then, we'll rewind the clock to see what history can teach us. After that, we'll get into who's winning and who's losing, before finally digging into what the experts say you should do about it. Okay, first up, the Great Correction. It's one thing to hear about a percentage drop, but it's a whole other thing to see the actual dollar figures attached to it. And here are those raw numbers. Wow. The average home in the GTA has lost over $300,000 in value from that peak back in February 2022. That is a serious shift in a pretty short amount of time. Now, if you think we've already hit the bottom, you might want to listen to this. Real estate analyst Daniel Falk says we might only be halfway through. The idea here is that we're not looking at a quick bounce back. We could be in for a long, flat period. And that idea of a long, slow recovery, well, it's not without precedent. To really get a handle on what could happen, we have to look back at the 1990s, which gives us a fascinating and maybe a little scary roadmap. Just look at this timeline. It really shows the long shadow a major correction can cast. The market peaked in '89, but it took 6 full years to hit the bottom. But the truly staggering part, it took until 2011. That's 22 years for prices to actually recover their 1989 value once you account for inflation. And this is exactly why that history lesson matters. Experts will tell you that it takes a long, flat period to rebuild this one essential ingredient, market confidence. Think of it like trust. As long as people think prices might keep falling, they're just going to wait on the sidelines. Now, this downturn isn't hitting everyone the same way. Not at all. It's actually creating a really fragmented market, a real tale of two cities, with very clear winners and losers. It all depends on what you own and what you're hoping to buy. And here's where it gets kind of counterintuitive. You'd think every seller would be taking a hit, right? Well, Daniel Foch points out this one surprising group that's actually doing exceptionally well. This table here really breaks it down. Look at that top line. If you're selling a house to upgrade to a more expensive house, you're actually in a great spot. Why? Because that 24% price drop on the multi-million-dollar home you're buying saves you way more cash than the 24% you might lose on the cheaper home you're selling. The math just works. But as you can see, for condo owners and investors, it's a much tougher story. And here's a big reason why. The condo market, which, remember, was the engine of everything for years, has seen activity just fall off a cliff. Sales volumes have been more than cut in half from the peak. That tells you everything you need to know about where demand has gone. Real estate pro Jim Emelson really hits on the human element here. He argues that the huge group of investors that fueled that condo boom, they're probably not coming back anytime soon. He says once you get burned that badly, you just don't go back. It leaves a psychological scar. So, with the price drops, the spooky historical parallels, this fractured market, what are you actually supposed to do if you're trying to make a move today? Okay, for sellers, the advice is blunt. The old rules are out the window. You simply cannot base your expectations on what your neighbor got in 2022. It's a buyer's market now, which means your property has to be the best-looking one on the block, because buyers have tons of choices, and they can afford to be incredibly picky. And for buyers, Jim Emelson stresses that this requires a massive shift in mindset. The whole idea of buying a place and watching it jump in value in a year or two, that's over, at least for now. You have to start thinking in terms of a decade, not a year. So if you're a first-timer trying to break into the market, it really boils down to a 3-step calculation. First, you just have to accept that things might be choppy for a while. Second, you got to recognize this creates new opportunities, lower prices, maybe some incentives. But third, and this is so important, you have to do the cold, hard math. Is buying, even at a lower price, actually the best financial move for you right now? And that really leaves us with this final big question. This whole correction is forcing us to rethink what homeownership in the GTA even means. Is a home primarily a wealth-building investment? Or is it just a home, a place to live? In this new reality, the answer might be changing for a lot of people.